Boom. Come on, Naeem. Naeem's on my ass. He said, Priamo. You're 35 minutes late. I'm like, yeah, I know, Naeem. I'm busy being a fucking hero. Oh, my goodness. Come on, Naeem. Naeem. I'm busy being a hero. Absolutely light. Oh, my goodness. Hold on. Mr. Producer. There you go. Now you can see my beautiful face. Naeem. I was busy being a hero. And while I was busy being a hero, running up business, cashing checks. Never mind, I'm not going to say the other part. Cashing checks. I was allowing the markets to settle down so that whenever we did the live stream today, we would actually have some real price action that we could talk about. The markets have been so volatile over the last couple of days because yesterday was Liberation Day for the U.S., right? Pompino, Liberation Day. That the price action has been so off the chart or so off the wall that I figured, all right, let me just hang tight off of the morning stream, allow price action to play out, allow markets to settle down a bit, and then we can get a better look in the evening time of where we played out throughout the day and where we're at. So, without further ado, ladies and gentlemen, because I know everybody's nervous, everybody's waiting. Are the markets going to bottom? Are the tariffs going to put us into a recession? Should I buy more? Should I not buy more? Is it over? Should I cash out? What should I do? All great questions. All things that we have to think about whenever we make our next plays. Because understand that equity markets, crypto, all these things are just probabilities. Nobody knows exactly what's going to happen and when it's going to happen. But in order to make money in this market, you have to be competitive. And to be more competitive than the other market participants, the people that you're going to take money from, you need to have an understanding of the macroeconomics. You need to have an understanding of the monetary policy in the United States. You have to have an understanding of how on-chain and on-chain and, centralized exchange assets trade. All these different things that we got to be paying attention to. So we look and we see how the tariffs settled the markets over the last 2 days. So let's take a look at these charts, right? How are the charts looking right now? Okay, are we looking terrible? Are we afraid? Is it a recession time? Because these are important questions we have to ask ourselves as we continue to position in the markets. So let me do a little Mr. Producer. We got all them hoes. Ready? Ready, Naeem? Ready, Naeem? Ready? There you go, Naeem. There's your chart. All right. We're going to get back to this trend line on Bitcoin. But first, let's look at equities. Okay, what are equities doing right now? Wow, would you look at that? So these demand and supply zones that I had drawn out on equities, the SPX, are playing out beautifully, okay? So we can even extend this down a bit to this low, okay? So all these news of tariffs going into place has thrown equity markets into a complete tizzy, all right? So we end up nuking back. So we had okay, we'll start with this. Okay, I'll show you some market structure and how to look at these sorts of things. So on equities in a macro sense, what we did basically is we had a failed breakout 3 times. Okay, so here's the level that we were trying to break out from. So we could do it from like right here. Okay. So this was our level to break out from, $6,100 on the SPX. So we had one attempt to break out, rejected, came right back into supply, bounced, came back into supply, bounced, third attempt. Okay, came back down into here. Third attempt at a breakout, failed breakout, we nuke. Okay, so this is important because this type of price action is something that you'll see pretty often whenever you get up into support and resistance. When you get a failed breakout, or on the contrary, a failed breakdown whenever you're at support, that shows that momentum is shifting and that market structure is going to break and start heading the other direction. Okay, so I'll give you an example. So at the previous all-time high on SPX, when we had this third failed breakout, that's when you knew, all right, shit's cooked, right? We're gonna get a pullback. And in December, this first top on equities was our top on altcoins and in crypto. Okay, so pay attention to this. So we had this failed breakout, and this is whenever on this down move and this pump right here in December, this is whenever altcoins and equities started pulling back. Okay, so that's whenever you should look to take profit if you were looking to exit the market at this point. Okay, so we draw back down into supply, we get a second failed breakout, third failed breakout. Okay, everything got cooked, right? Fine. So why did we know that at that point that's probably a good level to start taking profits, or say, hey, let me get out of markets temporarily, or at least de-risk, because we're having these failed breakouts? Well, if you look at other breakouts, let's take a look what they look like, right? So for example, here was a previous all-time high. Okay. Here was a previous all-time high. We pull back, we try to break out, we failed. We come back, we try to do a breakout again, we fail, and then we nuke. Okay? It's a loss of momentum. You failed to break out at these taps of the all-time high. Over here, when you get to the all-time high, you actually broke through, came back, retested, okay, and then pumped back up. So this was the previous high after we broke this high, and then what we do, we pumped higher, okay? So let's take a look at this one. Give you another example. So here's the all-time high. We pull back pretty harshly, okay, in August 5th nuke, that's why. But look at what we did whenever we came back up to the all-time high. We rejected once, okay, one time we rejected. We came back down. On the second attempt at a breakout, we actually broke out, created support here, and then we moved up higher. So on the second attempt, we broke through, okay? The issue presents itself whenever you get more than one or two or three failed breakouts, because that's a loss of momentum, okay? That's right. So one failed breakout, this one, we hit it. All-time high, pull back, boom, we broke right through it. All-time high, we pull back, boom, we pushed right through it. All-time high, we pull back, boom, we pushed right through it. So the issue was then, okay, here's now the new all-time high, we got to break. Pull back, boom, failed. Boom, failed. Now we nuke. Okay. So we're losing momentum. All right. So now that we've lost momentum due to these tariffs, what do we look like we're going to start doing here on the S&P? Okay. Let's look at that on this time frame. Okay. So here are our levels now. Let's get these out of here. So we played our supply and demand perfectly. We lost our supply. We came down to this demand, popped back up. Obvious place to short right here. Obvious place to long right here on a bounce. If you're playing leverage, okay, come back down. Now we're at the very bottom of this demand zone. This is a very important level to keep an eye on, okay? If we lose this demand zone, I've talked about this on the stream before. If we lose this demand zone and we, with conviction, come back down into here before a bounce like this, that's not going to look good, okay? Because now you're basically building a complacency shoulder, okay? Which a complacency shoulder, if you don't know already, means, well, basically the cycle is cooked and we're going to go back down, right? So it would look like something like that. So how do you know that's a complacency shoulder? Because it would be a head and shoulders, ready? So this would be, you could call this your shoulder, this the head, and this would be the other shoulder, right? So that's a complacency shoulder. So if we build something like this and we get this pump back up into this supply zone, right? After breaking further down into here, or even losing this level and coming back down into here, okay? That's a head and shoulders. That's not good. That means we're rolling over even further. So what does that mean for us? Well, if you get this shoulder to play out just how I'm drawing it right here, right? You get the shoulder, the head, the shoulder. Then you want to be exiting on the retest of this supply and that rejection. Okay, if we pump back up after dumping even further down into here or down into here, we come back up and we hit the supply zone. Now we're looking at a complacency shoulder building, and if we start nuking off of that again, time to start cleaning up. All right, time to start putting your toys away. So that's what we don't want to see happen. All right. Now, here's the good news. It has held. It has held. Okay. We just can't keep going any much further down. Right. Otherwise, you start building something like that. Right. Now, it's not to say 100% if you do come down into here, right, that it is over. It could be just a quick recovery, and then maybe you do break up past it. If you reclaim this supply zone, then yeah, you're breaking again to all-time highs, okay? But I'm just saying, keep an eye out on that, okay? Very interesting price action to keep an eye out on. So here's why I don't believe we're going into a recession after looking at all the confluence. The reason that I believe that this is going to be only temporary, not temporary, I mean, it's felt like a long time, but it's going to be temporary turbulence in the sense that's going to be under a year of this type of price action. We've already had about 4 months of it. The reason I don't believe this is going to be a true recession is we have different conditions in which this is playing out that aren't conducive to a recession. Is it possible? Could it happen? Absolutely. Sure. In my opinion, the probabilities are that it doesn't. So what the tariffs did is they basically created a bunch of uncertainty in the markets, which is not good for investors. If there's uncertainty, that's bad for price action. Okay. Markets like certainty. They want to know what's going to happen. They want to know how to price certain things in. They want to operate in a world where things aren't being shaken up. It's when you get unexpected news, unexpected conditions, unexpected tariffs, trade wars, things of that nature to take place, that's whenever you see the drawdown in price because people are unsure, therefore they de-risk. So they want to be less risky because they're not sure of what's going to happen. So the majority of these tariffs should be priced in, the price action. At this point, so as long as we're not going into a larger recession, we should be starting the bottoming out process, okay? So this is where the generational bids are going to take place if we are, in fact, bottoming out. Why do I think we're going to start bottoming out? Okay, number one. Global M2, which is overall liquidity in financial markets, is at all-time highs right now. That's my first bit of confluence, okay? It's at all-time highs right now. That means that economies, so right now it's China, are stimulating their economy by injecting liquidity into it. That's bullish. We're at all-time highs for monetary supply. Okay, that's bullish. That is not conducive of a recession in the sense that economies are going to start collapsing. That is not conducive to that. M2 is at all-time highs. Eventually, you're going to see the effect of this move on M2 over here. Because you got this move, which took place over here. This move, the pullback, is what we're experiencing here. Okay? But now we're moving back up to all-time highs. Good, bullish. That tells me, okay, 1 point, not recession. Okay, so we're at all-time highs on global liquidity, M2 supply, monetary supply. Let's take a look at the DXY. No, that's the VIX. Okay. Look at how the VIX is played out. I've had this drawn out for weeks, maybe over a month now, probably. These levels, okay? They played out exactly how I said they would play out. Look at this. So we had this drawn out while the DXY was still up in here, okay? So none of this price action had taken place. And I had put here, DXY, breakdown here is bullish. Why? Because if the DXY is depreciating, the value of the US dollar is going down. That means assets denominating it in USD, which is everything that we hold, are going to go up in value compared to the dollar. Bullish, right? And it also incentivizes investors, nations to put their US dollars into risk assets to preserve their wealth, because it's a pair trade. They want to outperform USD. So if USD value is going down, they want to hold risk assets denominated in USD. It's a pair trade. It's going to pump, right? This is how markets work. So we broke down from this supply, or from this demand, turned into supply. Beautiful. Nuke. We come back into this demand zone, just like how we had it drawn out. Did exactly what we expected it to do. Bounced. We lost the demand. Look at this nuke that happened today. Today and yesterday. Exactly how I said it would. Boom. Nuke. Lost it. So guess what? Now we get to change it finally to supply. Beautiful. So now we're at supply. So where are you going to see the next little bounce on the DXY? Well, where do you think it's going to be? Exactly where I drew this arrow, right? I had it right here before this took place. Boom. Boom. Nuke right down into this demand zone. So now you're going to see the DXY come into here. Okay. If we can lose this level on the DXY, we're cooking. Okay, we're cooking. Because now there's a free fall until these next major levels of demand. Free fall. Look at how strong this level was, this demand zone was for the DXY. Every time the dollar came down in this major demand zone, huge bounces, huge bounces, huge bounces, huge bounces. Boom, huge bounce. If we can lose this, okay, remember, DXY dumping is bullish. If we can lose this major demand zone, beautiful, beautiful, conducive for risk assets. Okay, love that. What else are the tariffs doing? Tariffs are bringing down yield. Okay, look at this. Once again, doing exactly what I had drawn out and what we had expected this to do. So we came up on these bond yields, right, that were pumping all the way up here, right? So the U.S. bond market was pumping, okay, from September 24 all the way up to January 25. Also here in October of 23, this high. We drew all the way down. We were pumping all through this. Okay. So bonds are also coming down, right? Look how I drew these levels. This was our demand. I had this drawn out as demand while we're up here. We lost it. We turned it into supply. We come back down to this demand zone. Bounce. We lost it. Look at these nukes now. This is exactly how I drawn it out. Look, boom. Grab this liquidity, like just how I said it. Look where it came. Grab the liquidity. Probably get a little bounce up into here. Okay, to retest. And then come back down in there. Just how I draw it right here. Okay, bullish. Right, these are the things I'm looking at to say, I don't expect a recession because people are going to be incentivized to buy risk assets once these trade wars start to settle down. So now this is supply. We lost it. Beautiful. This is now overhead supply. So we're likely going to get either just a straight nuke down, which would be beautiful, or you get your little bounce into your resistance, back down into our demand zone. Okay. Same thing with bonds, with DXY. If we can lose this major demand here, you're coming all the way down into either here or down in here, right? So this would be a huge level to lose on bond market. Now, if the interest rates on bonds continue to go down, why is that bullish again? Well, because nations like China, massive investors, similar to you can call them, what's his fucking name? Warren Buffett. They're going to be incentivized to move money out of bonds and into what? Risk assets, because the yield that they're getting off their bonds is no longer worthwhile holding. So they're going to move into risk assets. So I look at the DXY nuking. I look at bond yields nuking. And I say, okay, I like that. Global liquidity is at all-time highs. I like that. And guess what else? Guess what else we got right now? I'm going to show you this right now. So I sent this into the private Discord. Okay, you guys see this? Look what happened today with these the FOMC tool, okay? Okay. Because of what's happening with the tariffs and how equity markets are reacting, the Fed still has interest rate cuts in their back pocket. Okay. Another bit of confluence as to why I believe that this isn't going to be a recession, because we still have tools at our disposal if Jerome Powell uses them to his best ability and actually takes action quickly, not too late, when it's too late, and starts cutting rates quickly and ending QT, end it fully, markets will start to move again. So look at this. I just said this in a couple. We looked at this actually on Monday. Already since Monday, the percentage chances for interest rate cuts coming have shot up. So we went from likely 2 cuts this year up to 4 cuts. 4 cuts. Huge. We cut 4 times this year. Incredibly bullish once again. Why? Because low cap companies can now borrow money at a lower rate. Banks can borrow money at a lower rate. Individuals can borrow money at a lower rate. Cheaper capital, more borrowing, more spending, economy grows, companies grow, bullish for risk assets, more money in the financial system. U.S. starts to cut interest rates. What happens to global M2, monetary supply? Starts pumping even harder than what it is right now with China. China, like fucking Trump says, right? China. So look at how this percentage chances of cuts are pumping right now. So now on May 7th, 2025, which is the next FOMC meeting, we're already up to a 32% chance, 33% chance that we cut down to 4 to 4.5 basis points. Okay. June 18th, it's basically priced in. Yeah, we're going to get a cut on June 18th. On June 30th, it's likely, right? And this is how you know that it's likely that we get 4 cuts. So if it's in blue, that's the most likely scenario to happen in that meeting. So they're saying most likely on May 7th that we keep the interest rates the same. Okay, so no cut. But it's most likely on June 18th that we get an interest rate cut. And then look at this. It's most likely on the very next meeting, June or July 30th, we get another cut. And then it's most likely on September 17th, the very next meeting, we get another cut. And then here, December 10th, 2025, most likely in this one. So look, this one, it's likely that stays the same on this meeting. This meeting, it's most likely that we get another cut on December 10th. So 1, 2, 3, 4 cuts are now going to get priced into markets. 4 interest rate cuts. That's huge. Understand the implications of that. It's because we're trying to forecast long-term what's happening here, right? We can't control the local price action with what's going on with tariffs. Yeah, equities are down, crypto's down, etc. Okay, what are we trying to figure out? Are we bottoming, or are we going into a deeper recession where things are going to get much worse? Well, now the fact that they're going to start pricing in 4 interest rate cuts likely this year. 1, 2, 3, 4. Bullish for risk assets. Cutting interest rates is bullish. This is why in 2021 we got this massive blow off in equities and in crypto, because interest rates were almost at 0 because of COVID. Monetary supply, M2, global liquidity, increased by 40%. therefore injecting all this liquidity into risk assets, and this huge inflation took place. This is what we're looking at right now. So what Trump's doing with the tariffs, yeah, locally it hurts. Locally it looks bad. Locally it's blood. But longer term, he's making the right play. Why? Because by completely resetting the stage with global trade, he's going to bring so much more money, investments, liquidity, economy back to the U.S. Money's going to flow into American citizens' hands. What kind of money? U.S. dollars. You make the American people, American businesses, American investors richer. Guess where they're going to put their money? U.S. equity markets. It's a long play, okay? He is making the right play long term. It is the right play. Everybody's crying, screaming, tariffs, Listen, dude's a multi-billionaire businessman, deal maker. He knows what the fuck he's talking about. He's not an idiot. I would take his business acumen and his business sense over literally every single other politician in the Senate and in the House. He's the most successful businessman. So wouldn't I want to take advice from the person I want to be most like? Yeah. Hey, Donald Trump, if I take business advice from you, if I take negotiating advice from you, would I become more like you? I wouldn't. Beautiful. I'm going to take his advice. So he's setting up the stage for a massive rip later in the year and the following, while sacrificing local price action, understanding that the long-term effects of these tariffs are going to provide more liquidity, more prosperity, more money, more spending within the U.S. economy and the U.S. country, right? You're bringing all this money, all this business, all this investment back into the nation. Yeah, after we get through all this bullshit price action, we're actually going to rip even harder because interest rates are going to be that much lower. That much more business and money is going to be flowing into this country, which is then in turn going to flow into what? Risk assets. Genius. So that's what we're looking at macro. So 1, 2, 3, 4 interest rate cuts now, up from 2. It went from 2 to 4. Huge, doubled. Okay. Things keep going the way that they're going. This might even become the most likely, where in May 7th, which would be crazy, they might even cut May 7th, which would be sick. If they cut May 7th, fucking beautiful. But likely they don't. All right. So let's double check everything. Hilarious. All right. So that's another point of confluence. So the fact that the Fed has that in their back pocket tells me, okay, they're going to keep shit rolling before it gets too late. Hopefully Jerome does. Okay. All right. So these are the points of confluence that I'm looking at. What's the screen capture? And let's do, there we go. Okay. So now let's take a look at Bitcoin versus SPX. Something very interesting, okay? So if you look at Bitcoin in log mode, all right? Let's look at this. Make sure you can see it. Okay. If you look at Bitcoin in log mode, here's how the cycle played out from last cycle to this, okay? Here's your tops, bull market. Okay. You break down out of this bull market range and you come into your bear market, which is this right here. Okay. Right? Because this is your bull market range. And then down here is your make this one green. This one is your bull market range, right? So last cycle bull market, this cycle bear market, before we break out into another bull market, right? Okay. So what am I trying to show you here? This is what I'm trying to show you. If you take a look at this bear market reaccumulation on Bitcoin, okay, You finally break out and you start your bull market trend from this level right here. This low. On September 10th, 2023. Okay? That's when you start your breakout. This trend line on log mode has not been broken yet. Not yet. Huge bit of confluence. Okay? Why? Well, it's holding. So every time we've come back down and nuked, look at how perfectly this line has held us. Perfectly. So from the bear market breakout, this low, tagged it once, big moves up. We go through this 8-month range of death, right? Sideways or downward channel. We can even put it on the chart. Right? Up into this sideways channel, we come all the way back down, and both of our big wicks down come right down and touch perfectly on this trend line, right? Come back up on our next leg up, then we nuke all the way back down right to where? This trend line, okay? So my point is that this is still holding. We haven't broken this trend line yet. Okay, that means we haven't broken our market structure, our bull market trend since we broke out. So we haven't technically broken market structure from that perspective. Now, if we start to lose this, right, and then you see something like this up into like the 90,000s and we reject here and then come back down, what is that? What do we talk about? That could be. You could call it something like that. You could do that, head and shoulders. But then you're looking at a complacency shoulder again, okay? That's what you don't want to see. So that's something I would pay attention to, okay? So it's holding this trend line. Bitcoin is showing incredible strength right now while all other assets in equities are getting smoked. So this is what I want to show you. So if we put equities down below, SPX, we take a look at this together. Okay, log trend line doesn't work like that, but let's hide this. Whoops. Okay. Bitcoin has done this before. Bitcoin has led equities in drawdown and led off of the lows in the past. Okay. So when Bitcoin is showing signs of strength while equities is nuking, that's a strong bottoming signal. Okay. So look at this. We have a divergence on the two. So Bitcoin has been trending up while in the same time is it going to let me do it? Hold on. While equities have done that. Okay? That's a huge deal. There's a divergence there. Okay? So Bitcoin is showing strength while equities are showing weakness. Equities are drawing down as Bitcoin is drawing up. Huge signal. Why? I'm going to do it from like right here. Okay, here's the low. Right? You see what I'm saying? Bitcoin led equities on the downside. Okay? So Bitcoin telegraphed this move to the downside on equities. It led. Okay? Because this was the first top on equities. Bitcoin tops out right over here, right after it. Okay. Equities get a little pullback, comes back up. Bitcoin does the same thing, but then Bitcoin started drawing down as equities was topping out. So equities look at this. Equities hit an all-time high at $6,100, while Bitcoin was nuking or coming back down and right about to nuke, right? So Bitcoin was already at its all-time high 109. It was way down to 98,000, so down 10,000 points. Big move. All right. So understand what I'm trying to say here. This could be confluence again that we're starting to bottom out, and the low on Bitcoin likely is in. Okay. Could we set another low? Yes, it's possible, depending on what type of news we get. Is it likely, though? Is there a pretty good chance that we actually already saw the low on Bitcoin? Yeah. Yes, it is. And look at this divergence. So this divergence, again, to me is bullish because equities is still nuking and bottoming out and had these 2 days in a row. This is 2-day, 3-day time frames. Look at the daily. Right? Bitcoin is slowly trending back up as equities is trending down. If Bitcoin can hold and show strength like this, we're close to a bottom, okay? So that's what I'm looking at as confidence to say, okay, I don't think we're going into a recession. We're going to start setting complacency shoulders. Things are going to keep going lower and lower because I'm already seeing the strength coming out of Bitcoin, and these altcoins haven't been nuking how equities have been nuking, okay? So, beautiful, all right? Now, if we look at, let's take a look at Ethereum. So that's SPX, right? So we got to get that to hold tight. Let me also throw on M2 here. Can they do for me? Okay. So here's M2, global liquidity as well, okay? You can also see how this leads and lags markets as well. Okay. So do it like this. Okay. So global M2 leads and leads these assets because the money's coming into markets. So we get this huge pump. We come to new all-time highs on the M2, right? And then you see equities doing what from here? Ripping, and then Bitcoin doing the same thing, of course, ripping up into here, okay? So we get this drawdown, this tightening of liquidity, and that's when you see over here, Bitcoin led and equities following this drawdown, okay? This is why I'm still bullish, is you're seeing now this huge spike again in global liquidity where all this money is flowing back into economies and into businesses and individuals' hands, that it would only make sense that at the very least we get a very strong relief bounce and a counter rally on these markets because we're at all-time high liquidity again. So if this pump sent us to all-time highs and we're not entering a recession, it's going to be easier to access money over the course of this year, why would a new all-time high in global liquidity not at the very least get us back to all-time highs, at the least just get us back on a bounce before maybe double topping and rolling over? I would expect that. That's what I'm saying. So I'm just looking at it and saying it just doesn't make sense to me to bet on recession and say, all right, we're getting out of markets. To me, it makes more sense that we see divergence here, the divergence here. We're seeing global liquidity at all-time highs. QT was cut in half in the US. So quantitative tightening was cut in half on last FOMC meeting. Now we're pricing in 4 rate cuts this year. China is stimulating their economy, also increasing global M2. Prices are going down in the US. Inflation's going down. People are going to have more money in their pocket. It just makes sense that we rally again, that we have another leg up. It just does, especially after this much downside. So now we can take a look at something like ETH. And we can see ETH is doing a similar thing right now too against Bitcoin, where Bitcoin's moving up and ETH is coming back down, which makes sense. So if we get this out of here and we put down below ETH BTC, what's this right here? I'm going to show you how to look at this, right? Maybe bars, and then move this to another. Okay, look at this. I assure you there's alpha in this. Why is there a line right there? What is that? Okay, whatever. Okay, look at this. So now we're also seeing a divergence in Ethereum, which is also making me say, okay, as far down as we've come on ETH BTC, bottom should be coming into play here soon. Okay. So here's ETH BTC on the very top. Okay. ETH BTC has been a perpetual bleed since last cycle. Okay. Pump. And right now where we're getting this strength on Bitcoin and we're getting this upward move on Bitcoin, we're still getting this downward and this divergence on ETH. Okay. So Bitcoin is trending up while ETH is still coming down compared to where Bitcoin was, right? And so what does that mean for ETH BTC? Well, that means ETH BTC continues to bleed, right? So as ETH continues to bottom out and Bitcoin shows strength, this is where you're going to see the generational shove zones for ETH, right? Why? Look at it like this. You're probably going to see something like this on ETH, where you get this little deviation outside of this range down into here before a quick reclaim and then up. Why? Because you're seeing that divergence with Bitcoin. So you're going to see on ETH something like this. Okay. Right? You're going to see something like this on ETH. So I'm expecting ETH to bottom something like this. Bottom similar to this, right? Where you're going to see this continued strength and this move up and you know, kind of march up on Bitcoin. While you see this divergence on Ethereum take place, okay? And this is where you're going to be bottoming out on ETH, down in here, okay? Why does that make sense? Why is that confluent? Why do I think we go down lower on ETH while Bitcoin starts to bottom, okay? But this is good. Means we're bottoming. This is good. We want to get a bottoming structure and get a reversal of trend. That's how we're going to make money to the upside, right? So if I think we're still going to make a lower low on ETH, right? Because we have this divergence on Bitcoin and ETH. Why would that make sense? Well, down below, we're going to put it down below. Let's open up ETH BTC. Actually, I have it right here. If you get that divergence on ETH and Bitcoin the way that I'm showing it on the chart, and ETH continues to draw down and underperform against Bitcoin, what is that confluent with? That is confluent with our exact demand zone, Pico low bear market on ETH BTC that we had drawn out all the way down here. If ETH continues to draw down and creates a lower low compared to Bitcoin, that means Ethereum is underperforming Bitcoin. Well, if ETH is a worse hold than Bitcoin, how does this chart behave? Like this. Well, guess what happened down here last time? Alt season. So what would make sense this time? If we start bottoming out, ETH still underperforms Bitcoin. Guess what? ETH BTC draws down into here. Bottoms out right here, right? Bottoms out right here. I'm just saying. That's what I see. It makes sense. Okay? It makes sense, gentlemen. So outside of that, that's our cook session for today. All right, I just want markets to settle down so we can take a look at this without all the noise throughout the day and see where we settled. We're still in the macro range here on ETH. Like I said, I do see one last capitulation because it makes sense with ETH BTC down into this demand region. Oops. Down into this demand like 15, 1600. Scare the shit out of everybody. Back up. If you lose this though, these lows, if you lose these lows and come back down into here, GG's. Cool. All right, gentlemen. That's what I see. That's what I see. So we shall see. Where the fuck is this? What is this percentage? Why am I in a percentage here? Thank you. My goodness. Okay. Divergence. Study divergence. All right. Let's see here. Do a little Mr. Producer. All right. We're going to do live scene. Boom. All right, gentlemen. Good. We had double-digit live viewers across all streams again, even on 11:30 p.m. Eastern. Just what we do. Just what we do. Okay. Aside that, gentlemen, continue to build your network, continue to build your income, continue to get liquidity, some fresh POW on the sidelines and stable coins in your bank accounts, continue to accumulate money and prepare for the rotation in the risk assets, or prepare for the rotation out if that's what God gives us. Okay. So any questions, comments, concerns, let me know. I'm going to get out of here. See what the gentlemen are saying here. Bomba clat. Somebody just jumped in right now. It's too late, player. Stream's over. All right. All right, ladies and gentlemen. Appreciate y'all. Let's go fucking win. Let's go make some money. Don't give up. We're close. Remember, it always gets harder before it gets better. Pause.